The start of a new month means there's plenty of data to be released, so with a very busy data releases week, let's have a closer look at the current week's biggest events. Joining me is the CEO of London Stone Securities to have a closer look. So starting off, one of the key events of the week is US non-farm payrolls released on Friday. Now, is this set to be the main US dollar driver despite the news coming out of the United States on hurricanes and the terror in Las Vegas?
So, short answer is no. I don't think the markets will be resilient to non-farm payroll data. I don't think the data for the hurricanes is as important. The hurricane really has had little impact on the Dow Jones. If anything, the Dow Jones is still trading above 22,000. And the US economy really at the moment is being driven by two things. It's employment and it's consumer spending. Of course, the two are very much linked. You know, when you have higher levels of employment is currently 4.4%. That means that people can spend more, they have more money in their pockets, and that really is the backbone of the US economy right now. So if you look at, for example, in July, I believe non-farm payroll came in at 209,000. In August, we were expecting for them to come at 180,000, they came in at 156,000, so that was a softening. And then, of course, for this month, we're expecting 100,000. So you can see a gradual decline in non-farm payroll data. And I think the employment figures will be very, very important. Of course, you've got to look at it in the context, of course, of Janet Yellen. And of course when she's speaking on Wednesday, and we're also looking of course at the impact of course on the possible interest rate hike decision which will come out in December. Now overall the US economy still looks strong, the Dow Jones is still above 22,000, so at the moment it looks quite good. The unemployment rate is 4.4%. Also do pay attention to the wage inflation. Employment data is obviously one thing and non-farm payroll data is one thing, but also look at wage inflation. At the moment it's about 0.1%. We're expecting that to get to 0.2%. And of course if that happens, that suggests the US economy is picking up, gathering pace. But as I say, I don't think you can ever discount non-farm payroll. And of course this week is a huge week for data, so it's going to move the markets. I mean, everyone's waiting for something to happen. The markets are a little bit static at the moment. It's softened a little bit. October's never a great month anyway. But I think Friday we're going to see some movement.
And Janet Yellen will also be speaking on Wednesday, so will this be a big market mover? And also, what key phrases can we take from Yellen's speech?
So Janet Yellen, obviously she's speaking on Wednesday. Now, from her comments from last week, it would suggest that she's already in favour of a rate hike in December. As to whether she's going to pull that off or not, I don't actually know. Nobody actually does. But what we do know is that the probability of that happening has increased. The market had priced in something between 45 and 50% of a rate hike. We're now probably looking close to sort of 70 to 80% of a rate hike. On the back of that, the dollar has appreciated from last week. What is interesting, however, is that the strongest currency from last month was actually the pound sterling, and that's because the Bank of England are also expected to raise rates next month in November. It is interesting to note that obviously Yellen's also talking about how the fact that an easing of monetary policy also does have quite serious ramifications for the US economy. So there's a general shift now, not just in the US but of course globally and all over the world, that the fiscal stimulus that we've been seeing since 2007, 2008 is now coming to an end. So we've seen that in terms of the bond buying backs, we've seen that in terms of QE, we've seen that in terms of now interest rates slowly, gradually going up, and I think that's generally the case. The issue with the US, of course, is that inflation is still below 2%. And so, unlike the Bank of England, where inflation seems to be more of an important factor in the interest rate decision-making process, the US doesn't seem to be so concerned about inflation. So in terms of indications, I think it's difficult to say exactly what Yellen will say. She may well, I suspect she's probably going to be slightly more dovish than what she was last week, but there's very little upside value now in the dollar, I think, because it's already been priced in. So you could see the dollar start to slow down a little bit, and possibly I would be looking to go long euro dollar, possibly to go long of cable as well. But we'll have to see. Of course, what she says on Wednesday, of course, becomes less important, of course, if the non-farm payroll data is significantly different and deviates from the 100,000 forecasted mark.
Now we have seen this week started off with UK manufacturing PMI. Now with UK growth revised down, is the sterling at risk this week?
Yeah, it will. I think obviously there's two things. You've got the PMI data, which is of course last month did absolutely fantastic. It was expected to come at 55, I think it was, came at 56.9. It's the fastest pace for 7 months. However, something even bigger than PMI, of course, is the economic growth. And the economy has been shown to be slowing down. So whether or not that's going to be justifiable reason for the Bank of England to now raise rates next month is questionable. You'll know that the Bank of England have been talking about raising rates now for probably over a year, and they still haven't done that. So I'm not sure whether or not they actually will raise rates. And of course, I think if the economic outlook, especially with Brexit overhanging us at the moment, still remains fairly severe, which I think it does, then I think there's probably some reasonable logic to think that they won't raise rates, and that could cause a bit of softening in the pound. However, as I said, I'm bullish on the pound against the dollar, so I'm bullish on cable. I think that will probably get back up to maybe the 135 level. I'm a little bit more sceptical against the euro. Because I still think that in a global market, I still think the euro is probably the best place to be right now. The US economy is probably slightly overheated. You've got the UK economy now still struggling, and especially with Brexit and how that plays out will affect that. So at the moment, I'm more along euros, but we'll have to see. I think there's going to be, as I say, it's going to be a big week this week. Don't forget, with Mario Draghi speaking, that will give us a lot more direction about the whole market as well. So it's not just Yellen and non-farm payroll data or PMI, it's also Mario Draghi. So this week will be a big week. And of course, do remember that October, as I mentioned before, is historically a bad month for the market. So we might start to see a bit of easing in equity prices anyway, and that will filter through in terms of currencies as well. But it's going to be a big week.
Well, Ranjeet, thank you for your insights, and thank you for watching. Now, as Ranjeet did say, Mario Draghi will also be speaking this week, and our journalist Jack Everett will be taking a closer look at the euro on Wednesday, so be sure to check back.